Welcome to the FML Podcast, the podcast on a mission to uncover actionable insights, explore the latest trends, and to catalyze your fintech's growth. Join Growth Gorilla's founder and managing director, Shameer Sachdev, and some of fintech's hardest hitting marketers and leaders.
Welcome everyone to today's episode of the FML Podcast. With me, I've got Nathan Spiteri, Head of Growth at Plend. Nathan, thank you very much for joining me today.
Very excited to be here.
I've had a lot of Nathan today, actually. You joined us a little bit earlier on for one of our round tables at the Duck and Waffle. And I hadn't realised that we also had this recording on the same day. So, as I said earlier, we try to save all the good stuff for the podcast. So we'll see what happens.
So we didn't get the duck, which was a bit...
Yeah, that was a bit disappointing. There was a lack of waffle and duck. But I will send my feedback to them. Cool. So Nathan, let's kind of kick things off. Why don't you tell us a little bit about yourself, your journey so far, and kind of your sort of arrival at Plend and your growth at Plend as well?
Yeah, absolutely. So I'm Australian, as you can probably tell by the accent. So I've been in financial services for about 7 years, 10 years now, actually. Where am I going? But more traditional lending at Commonwealth Bank in Australia. So I've done all kind of business banking, mortgage lending, personal loans, credit cards, the lot since university. When I moved to the UK, really wanted to get into fintech. I started my fintech journey at WageStream, which is another impact fintech in the UK. About a year after that, met Rob and Jamie and helped them launch Plend in the UK. So we're a consumer lender. We focus on the near/subprime market, and we use open banking to score them as opposed to traditional credit scores. And that's kind of our difference. We are heavily impact driven. And by that, I mean we have things like a rate cap. We do blind underwriting, which I can touch on later. And we have a bunch of initiatives to help us serve our customers better.
So you mentioned subprime. I understand in the context of obviously, the mortgages and kind of all of those bits and pieces. Are we talking about individuals who have got poor credit rating, or are we talking about individuals who have, perhaps struggled to get a loan because they're self-employed, or is it all of those things?
I think for us, it's mainly all of those things. Don't really like the term subprime. I think it's quite a negative word for the market because a lot of people are put in that bucket. The prime is really just the top percent. And then everything under that basically gets put into this bucket of either poor credit scores, thin credit files, or whatever it might be, newly migrated to the UK, things like that. There's definitely a ton of people in the UK who fit into that category. It's hard to kind of pinpoint one reason why.
You said obviously you utilise open banking as part of your tech stack. Do you want to kind of talk us through, I suppose, the mechanics of Plend and kind of how it works, and I suppose what makes you different from, say, other traditional lenders that operate in your space?
Might just scale back and define what I mean by open banking, because I get it's a bit of a techie term that some people even in fintech don't really get. But basically, what we do is get all our customers to connect their main bank account. And based on their spending habits, our IP technology called the Plend score can actually calculate whether or not they can afford the loan. And that takes into consideration negative factors in their spending habits and positive factors. So negative factors are things like gambling or returned direct debits, and positive factors vary really, but it's mainly paying your bills on time, frequent income. It's mainly based on affordability as well, so making sure the customer can actually afford the loan. So we do use a bit of bureau data, but mainly for really adverse kind of negatives on a bureau file, as well as to confirm that the customers who they say they are. But in terms of the decision, we heavily rely on the open banking data instead.
That does somewhat make you unique, because are there any other lenders for I know obviously in the B2B space, there are lots of lenders that use open banking coupled with Kodak that obviously allows connections into accounting platforms. But in the B2C space, does that make you one of the only players that lends via open banking?
Credit Kudos were probably the one dashboard that were very widely used that a lot of lenders were kind of using. But the problem with that was that Credit Kudos was trying to be fit for everybody. So you had kind of some prime lenders, some near prime, some subprime lenders. You had, I think, even business lenders or a variety of lenders using this one dashboard. which wasn't really built for a certain demographic. So we were obviously weighing up the pros and cons of building the dashboard ourselves or kind of using an off-the-shelf solution. Luckily, we didn't, because they're now bought out. Yeah, we would have had to pivot a bit there. But we built our own just so we could serve our own market and make it purely for and about our customers, rather than trying to put our finger in the air and guess, what sort of insights we want from our demographic that we don't know yet. So that's our IP. We call it the Plend score, and that's basically what we use on all our decision making.
You mentioned this earlier on today, that it had been 2 years since we kind of, like, you and I sort of first spoke. And I hadn't realized, it had been that long. But, a lot has happened, within those 2 years, for Plend. Yeah, do you want to just talk about, I suppose, Plend's journey in the last couple of years? We'll talk about like the growth piece and the marketing piece in a moment. But yeah, it'd be great to kind of like touch upon the kind of like the key milestones and kind of where you are today.
Yeah, absolutely. So I think getting the FCA permissions was probably the biggest milestone and probably the longest one to achieve, to be honest. I wasn't involved too much in the process, but I was still helping the guys get the product ready for market at that time. So that was huge. And then on top of that, getting our first customer, running our first campaign was massive. I think between those two events and leading up to those two events, we didn't know what the customer demographic was going to be until we actually started lending. So we always kind of positioned ourselves, as you can see from our existing website, as a lender who would support kind of your younger people, recently immigrated to the UK, might have a lower income, that kind of demographic. But our average customer is actually 40 years old and earns around 40K. So it's completely different to what we expected. And I don't think we realized how bad the kind of landscape is and how many people actually need access to an affordable product until we started lending. So in terms of our growth strategy, we kind of built up a wait list, which we're very proud of. We launched and we kind of broke the system in the first week because we had too many applications on day 3, and we had to all scramble at 8 p.m. to try and come up with a solution and a comms strategy to manage that. So we did learn a lot in that phase, and we also didn't realize where we were going to get most of our customers from. So there's the partner channel that we rely on the most, rather than your kind of traditional B2C channels like social media or whatever it might be. So there were so many learnings, which we can talk to later, but it's definitely been a crazy 2 years. But I think now we're starting to kind of understand a lot more who our customers are, where they are, what we need for in quality customers, and what's important, quality over quantity, and that sort of thing.
I always think it's really interesting, kind of like where business sort of starts off, the hypotheses behind, hey, this product is for so and so, and then kind of where they end up. Like you said, you initially thought you were targeting sort of a younger sort of audience, 25 to 30 as opposed to the 40s? Is that kind of what the... Yeah,
I don't even think we wanted to target that market. We just kind of made an assumption and said, these are what we think those customers would be like. A lot of it was off the back of Rob, our CEO, who went through a similar experience of migrating to the UK, having a thin credit file and being locked out of credit, and who still can't get a mortgage. And he's kind of, in his early 30s right now. And we kind of assumed that, him 5 years ago is the kind of person that we would be targeting. But that only makes up a small percentage of our customer base, really, which is kind of alarming, because that we're still getting a lot of customers in that range, but there's so many other customers on really good incomes and have, corporate jobs, for example, and mortgages, but they're still coming to Plend because obviously they can't afford a prime loan from a high street bank. And that just plays to that disparity between the kind of prime, near and subprime markets, right? You would assume that near and subprime generally maybe don't have the best income or don't have a mortgage, that kind of thing, but quite often they do.
You mentioned obviously your current audience is somewhat older than you first expected. And you said, the 40,000 income, 40 years old. Are there any learnings or are there any sort of clear points of data that, perhaps that you can talk to around the sort of type of customers that are utilising your services? So, are you seeing a lot more sort of self-employed individuals? Are there sort of like clear gaps within the market that Plend is able to address?
We are actually unable to lend to self-employed, so we can't lend to full-time students and self-employed. But what we are seeing is a lot of debt consolidation. So of the loans we approve, about 70 to 80% are actually debt consolidation. So these are people who have high-cost short-term credit, or they have credit cards, or they have other personal loans that might be in your 40, 30% interest APR range. What they want to do is roll that into an 8 or 10K loan for 5 years from Plend, and they're saving thousands in interest over those 5 years. So that's kind of what we're seeing as a core purpose for the loans. And then second to that is home furnishings and home upgrades, home improvements, which is a little bit of a tricky one because we're starting to find out that people always put that in when they don't want the lender to know what they're actually using the funds for. So I think that's a known thing in lending. But that's the second most common. I mean, a lot of the time they are, and we can see that they have a mortgage or based on their previous spending, you can there's indicators that show they are doing that. But yeah, we're aware that you can't always trust what the loan purpose is from a self-stated point of view.
I think I put down that when I was taking a loan out, I was getting an extension done to the house, but I was living in a flat at the time. So I suspect that's, very common. Let's talk about your acquisition and I suppose your growth, really. And just sort of to put this in context, obviously, I think quite recently you secured quite a large funding round. I think part of it was debt, part of it was equity. But in order to obviously attain that, you've had to demonstrate some numbers, some traction, maybe a degree of product market fit. So it'd be great to kind of understand some of the numbers behind that and then kind of how you reached those numbers and the tack that you took.
What was most exciting for that particular raise was the kind of potential that we had. We were deploying funds quicker than we were receiving it. So a lot of times in the early days, we would kind of have to tell customers you might have to wait a bit longer than the 24 hours to get paid out because we would have to find ways to unlock different deadlines and whatnot. So a lot of that fundraise, as you said, was in fact debt, but then a portion of that was operational as well. I think a big reason why we secured that was our growth ambitions included a B2B proposition, which was our embedded finance solution. So we have launched a product with Make My House Green, which is a kind of an arm of Switch to a green energy installer. And at point of sale, we offer kind of a longer term credit solution, much like a Klarna. It sits like on the same steps as Klarna, but we fund the loan, pay Switch directly, and then the customer has their product installed by Switch. So that's something that we're focusing on this year. And I think that was attractive at the time because there weren't many other players doing something like that, especially utilizing open banking. And that just kind of allowed us to open the floodgates a little bit more than our standard acquisition channels. And our standard acquisition channels, we're talking partnerships with major affiliates. And even then, we haven't really unlocked them to their full capacity yet. So there's so much potential. And I think I mentioned to you earlier, when you're talking about customers and borrowers, there is, some people say that not all customers deserve to borrow or should borrow, but at the end of the day, you can't change that customer's mindset. They are going to borrow even if you say no, and what they're going to do is go to a high-cost short-term credit provider, or they're going to go to something like a loan shark, friends and family. So I think it's very important to have affordable and longer-term solutions in the market that are catered to those borrowers, and there is such a huge population that just doesn't know that they have that access or can't get that access because other providers are utilizing things like credit scores as opposed to true data points like affordability.
Have you found that because you're using true data points and therefore able to lend to individuals who perhaps who have been unable to obviously receive funds from traditional sources, have you found that there's been an inbuilt referral mechanism with that? Are they recommending it to their friends? Are they recommending it to the Plend to their families? Are you seeing a benefit from that?
Yeah, especially as of late. So we track all our sources. So whenever we work with a partner, which is our main strategy at the moment, we can see where they're coming from. We are definitely seeing an uplift of no source customers. And I guess that's just the direct channel. We do no marketing at the moment in terms of social media, bar some obviously LinkedIn and B2B kind of pieces and blogs and whatnot, and a bit of press. But they're not really acquisition strategies. So when we're seeing direct customers, more often than not, they are friends of friends or have read our Trustpilot, or you can see the kind of network effects happening, and see that's reflected in our Trustpilot reviews as well. People don't know that they have solutions like Plend on the market. And obviously, if myself or even yourself, if you weren't able to get a 10K loan and all of a sudden Plend's given that to you same day and you've been able to consolidate £10,000 of credit cards, then you're obviously going to tell all your friends and family who you've probably been complaining to for the last kind of 2-3 years about how you can't get out of this debt spiral, right? So I think it's just natural that you'll get that organic growth. And I think it's really nice to see, for sure.
You mentioned obviously, you haven't really fully, I suppose, utilised all of the partner channels. So when you say partner channels, are we looking at just sort of the standard main player affiliate sites? Have you sort of explored sort of more niche bloggers? And what about things like partner stuff? Are you working with any sort of larger organisations to service them?
All of the above, really. So affiliates are our major kind of acquisition channel. There's like no shortage of customers across the big affiliates, right? They basically serve if not the majority of the UK. So if you are keeping great relationships with those partners, you are likely to start receiving a ton of traffic. And in a lot of cases, when we start launching, we actually have to put a daily cap because we need to monitor the quality. We need to monitor the conversion. Each partner has a different conversion kind of expectation. We need to make sure the journey's slick as well. So we are still kind of working through those challenges. And that's kind of the reason we haven't been able to fully utilize all these partner channels just yet. Another piece of the puzzle there is that we use open banking, and a lot of the major affiliates don't actually enable open banking data to pass through to us. So we're missing a kind of core ingredient in our decisioning when it comes to referrals from those affiliates. So that's something that we hope to kind of see change in the next couple of years, that open banking becomes more or less the norm, and we are able to use those data points from the partners collecting it, which will hopefully increase the conversion. And then we've got kind of the embedded side that I mentioned, where we are looking at working with larger organizations and rolling this out to customer bases of, say, super apps, or like I said, green energy retailers is something that we're really interested in. Basically anyone who's offering higher value products and has the demographic that wants lending. It's even better if that demographic maybe doesn't fit the prime market as well, because then we're serving them through our open banking, which is quite exciting. And then the blogger piece as well, and influencers or finfluencers, we've only just started to explore. I haven't really executed on that just yet. But yeah, like I said, there's a lot of work to be done in the affiliate and embedded space. So those two are probably our priorities for this year.
When you say higher value, what do you mean by that?
So I mean higher in loan amount generally, or product price. So what we don't want to do is fall into the kind of sub 1K market and be considered kind of high cost short-term credit, because the risk associated with a lower value loan is a lot higher than a higher value loan. And I guess in our point of view, those higher value loans are more life-changing, and therefore they're more valuable to the customer. You can do them over 4 or 5 years and really make a difference in their life. And that's the kind of impact we want to have. If it is an impact partner, though, for example, we will still work with them and help them fund whatever solutions they need via the app. So if they want to offer a lower value loan and they don't have their lending permissions, for example, but we can see that their values aligned and they are making an impact or trying to make an impact, we'll definitely look to support those partners as well. It's just what we wouldn't do is kind of be confused for a buy now, pay later, for example, or a very low value product, or encourage shopping for unnecessary items and things like that. That's probably what we want to steer away from. So 1,000 seems to be the kind of minimum that we tend to play around with.
And you mentioned, obviously, partners that want to make an impact. I know that's, we were talking about it earlier on. I think fundamentally what you were saying is that the ethos behind making an impact is really bedded in within the fabric of Plend, really. Yeah. Do you want to just take us through, really kind of how far you've gone as a business to demonstrate, obviously, your kind of commitment to making an impact?
Yeah, absolutely. So even from the very early days when we were launching, we engaged Alice Tapper, who's a buy now, pay later kind of campaigner. She also runs a Instagram page called Go Fund Yourself, which is for financial support and things like that, tools and tips and tricks. And early on, it was kind of just meant to be, I would say, maybe like an influencer relationship. Sorry, Alice, if that's incorrect, but it was kind of just getting her support and having her kind of behind us, I guess. But in the last few years, she's really been embedded into the business, and she's now employed as head of impact. So we have her on part-time as head of impact to drive those initiatives. We've also recently implemented an impact charter, which is enshrined in the business. It's on the Articles of Association on Companies House as well. All employees have signed that, and that kind of encourages certain behaviors and ways we look at customers and the purpose that we serve. And then that is a hard rate cap. So right now we currently have a rate cap. We don't go over 25% for our customers, which is something that we haven't seen in the market before. And I think that's just something that we've done that really differentiates ourselves, as well as that we have our financial inclusion report that we put out annually. So this last year's was on the impact of kind of COVID, and this year's was more focused on cost of living crisis. We've touched on access to green energy products. Mm-hmm. And then even just from our roots, our first official round of seed funding was from the likes of Nationwide Building Society, who helped us get off the ground, who's also another like-minded business, as well as Fair by Design, which is a fund that focuses on businesses tackling the poverty premium. We've gone full circle. Literally everyone in the business is in the business because we believe they want to make an impact, and we've made sure that that's really enshrined in the business. That's one of our major USPs and one of our major ways that we're different to a lot of companies out there. I don't know how I forgot this. We're also applying for B Corp, so we're currently B Corp pending as well. Again, something very unique for a lender because it is very difficult to consider lending as B Corp and ethical. It's hard to kind of own that space because of the type of product, but we've kind of put all our effort into making sure that we do stand out. I think we've been quite successful in that.
That's amazing that there's such a commitment on your side, from Plend to demonstrate, how important making an impact is to you. I suppose that it naturally just leads us on to the question of kind of like outlook, really. And I think there's a few sort of areas in terms of outlook. I think one is, how does that impact piece play out as you scale as a business? And as you're kind of 15 full-time employees now, how's that going to play once you're perhaps at 30 or 40 or 50? How do what are your intentions in terms of, kind of communicating that as you eventually try to drive brand awareness? And then I suppose then ultimately, kind of what is Plend's plan for the future? What's the outlook for Plend?
Yeah, sure. So just on the first few points, I think as we scale, which we've done, from ground zero, I was the first hire in the team. So I've seen it grow from no employees to where we are now. I think every employee that's joined, we've really made sure that they are, as passionate about the impact side of the business as they are about, wanting to join a startup or the other perks of being in a kind of fintech company like that. That all is kind of great. But ultimately, if you don't have that passion and drive to make an impact, whether you're kind of in the data team or you're in the customer success team or in the marketing team, then it's not going to be a right fit. And I think that mentality will definitely continue to carry on, years from now. That's what Plend was built on. And I can't see that changing. And I guess that's a testament to kind of Rob's own story. And Rob and Jamie, both the two co-founders, they're both extremely passionate about team culture and making sure that the right people in the team are doing the right job and all share the same vision. And that's part of why the Impact Charter then came about, to make sure we all know exactly the impact that we're making. And I can't imagine that changing anytime soon or ever, really. And then kind of how we continue that as we grow. I know it's quite common for businesses to start with a good idea in mind and try to be ethical. And then as you scale, obviously, the corporate piece gets to you and you kind of have to organically pull back on a lot of the impact stuff. But I really just can't see that happening at Plend. I think we've focused so much on it on the early days, like it's in the Articles of Association, as I said earlier. It's literally enshrined in the business. I really can't see that happening even when we're at 200, 300 employees, even at 1,000 employees. For us, I guess it just means we'll be able to service more people, potentially offer more products, help tackle that poverty premium with better partners. And I think just touching on partners, that's another key part, making sure that you are aligned with the right partners, making sure that you're not kind of just thinking commercially about partnerships, you're thinking about the values alignment. And I think that's something that has really helped us stay on track. So all the partners that we've really reached out to or that we're now embedded into or kind of working with, they're all values aligned, and they all kind of share the same mission as us. They all encourage us to do what we're set out to do and make an impact. And we make that very clear in the early days. And I think that kind of mindset is how we differentiate ourselves. And for me personally, that's not what I've seen in previous employers, especially not, in a high street bank when I was in financial services in the early days. So I think that's our kind of unique point. And proud to say that I can't see that changing ever, really.
And then, I suppose, what does the next 12 months look like for Plend?
It's probably going to be quite busy, to be honest. We've got like lots of awards and things like that coming up so far. Our acquisition goals are pretty high. So like I said, we need to unlock a ton of channels. We're really focusing on that embedded solution. So we're talking to quite a few prospective partners at the moment to make sure we're launching with the right partners, we're getting the right customers. I think I touched on this earlier, but for us, it's a massive focus on quality over quantity as well. So initially, I think any business, not just a lender, you want to get as many customers as possible. Like that's your first kind of intuitive thought. It's like more customers gate, yeah, this is going to be great. But as a lending business, or as a business that, you know, is kind of a 5-year product, for example, you need to make sure that they're not defaulting. You need to make sure they're the right customers for you. You don't want to fund them and then they pay it out. Everyone's paying them out the next week, for example. So now we've had customers live for, you know, almost a year. We're starting to see which channels are giving us the best quality. So it's kind of just fine tuning as well as growing. So it's just finding that happy medium with every partner, to be honest. And that takes a whole team effort. I think being on the growth side, you need to make sure your ops are aligned with your kind of marketing. Your marketing's aligned with the product. Your tech's aligned with the product. Everyone's kind of, you know, in it together, really, and no one's kind of kept out of the loop. I think it's probably more important in this sort of business than it is in other businesses, because it impacts the whole business if you're not getting the right customers in. And we're learning that for sure. So the teams, you know, we're still fairly new, fairly young, but I think we've done great, and we're definitely seeing potential. We're seeing the customers grow month on month, which is fantastic. So now it's just about fine tuning and making sure the right partners are bringing in the right customers. I think that's kind of core. And then secondary to that is making sure these embedded partners are kind of up and running the way we want them to. And then that'll allow the team to grow and scale, I guess, this year. So it is a big year. And yeah, looking forward to see how it rolls out, really.
Nathan, that's brilliant. Thank you very much for kind of like sharing your story and kind of Plend's journey as well. Let's jump into our quick fire round. What podcasts are you listening to at the moment? Yeah,
it's actually a little bit cliche, but I'm listening to Diary of a CEO by Stephen Bartlett, just like everyone else. I think I've been listening to it for a couple of years, but I think it's just, yeah, his perspective is quite interesting, especially if you're in the startup world. I don't really listen to podcasts too much, so that's the one that's on my radar right now.
What's your favorite fintech app?
I don't really have a favorite fintech app, but what I do like is kind of super apps and apps that are trying to do things. There's a lot of things happening in the financial well-being space right now, and I think that's quite exciting. So we're speaking to, or we're seeing a couple apps who are now doing a lot of debt consolidation apps where they can actually pay off the cards themselves, credit cards themselves, which is something that hasn't been done right before, which is very exciting. And then there's a lot of other apps coming in that are kind of trying to be full scope super apps. So just kind of seeing those develop is quite exciting.
What's the best bit of life advice that you've ever received?
To the UK from Australia was probably one of the best decisions I made. I'm shattered I didn't do it sooner because I'm almost 30 now. But I think, you know, that's definitely a piece of advice I'd give my younger self, and definitely like my kids when I'm older, is to just pack up and try something new. It's definitely good for personal growth and whatever you want to achieve, especially somewhere like London, really. I mean, it's an amazing place.
Nathan, thank you very much for joining me today. It's been an absolute pleasure having you on.
Oh, good. Thanks for having me.
The FML Podcast is brought to you by Growth Gorilla. To find out how our marketing growth experts can boost your fintech's growth, head to growthgorilla.co.uk. And make sure to search for the FML Podcast in Apple Podcasts, Spotify, or anywhere else podcasts are found. Don't forget to click follow to ensure you don't miss any future episodes. On behalf of the team here at Growth Gorilla, thanks for listening.